Welcome back to the Single-Family Real Estate Investor Due Diligence Checklist. Chapter 3: Familiarizing yourself with leases in place. Real estate investors need to become familiar with the tenants who are currently residing in a potential investment property and become familiar with the lease they signed. Lease covenants can vary widely from lease to lease and state to state. Investors should at least know the following regarding their leases. We will assume the residents are under a current lease. One. When does the lease end? 2. What is the current rent amount and security deposit? 3. What is the required notice to vacate in the lease? 4. What is the required state minimum amount of time to make changes to or terminate the lease? 5. Did the lease require the tenant to acquire renter's insurance? If not, the investor should seek to make this a requirement to ensure that the resident's personal possessions are covered in case of theft or loss. 6. Which utilities did the lease make the tenant responsible for? 7. Did the lease require the tenant to be responsible for maintenance of the property such as lawn care or snow removal, and if so, was a discount provided from the rent, and if so, how much? 8. Did the lease include parking? If so, was an additional amount agreed to be paid for it, or was it agreed to on a first-come, first-served basis? 9. Did the lease allow for pets, and if so, which pets? Dogs, cats, or other animals? Was an amount agreed to be paid for a pet rent or pet deposit? 10. Does the lease allow the tenant to conduct a sublease or not? If they are able to sublease, did the lease provide a notice requirement? 11. Does the lease reference a holdover fee? A holdover fee results when a resident doesn't move out by the time they agree to in the lease. 12. Was a late fee agreed to in the lease? If so, how much and when would the late fee kick in? 13. Does the lease state what would happen upon the event of a natural disaster or property destruction? Most states allow residents to end their lease upon a natural disaster such as a flood, fire, tornado, hurricane, or other natural disaster type of event, but state laws do vary on this issue. 14. What type of lease was in place? Was it a gross lease, net lease, or percentage lease? Depending on your real estate investing strategy, this could be important. Gross leases are the most common and are often used where the tenant pays for the rent and certain utilities while the owner pays for repairs, insurance, taxes, or certain utilities. Net leases are where the tenant pays for rent plus most other costs associated with the property such as repairs, taxes, and utilities. In a triple net lease, the tenant basically pays for everything other than common area maintenance. Net leases are more often used for large commercial or industrial property types. Percentage leases allow the tenant to pay a fixed rental fee which is normally less than a gross lease, but then also pay a percentage of the gross income their business receives. The owner will normally pay for taxes, repairs, insurance, and maybe some utilities. Variable leases are normally separate into graduated leases or index leases. Graduated leases provide for specified rent increases set at future agreed-to dates by the tenant and owner. Index leases allow rents to be changed upward or downward based on economic indicators such as the Consumer Price Index. Other, less common, lease types might include ground leases, where tenants lease ground rights separately from the physical property. Oil or gas leases used for oil exploration purposes. Lease to buy, where a buyer might have not qualified for an initial purchase but will complete a purchase agreement and buy the property at a later time. Sale and leaseback, where the original owner sells the property then decides to lease the property back from the new owner for a period of time. With such a wide array of leases, lease options, and covenants, investors need to know the leases in place like the back of their hand to be sure a lease in place won't disrupt their real estate investing exit strategy. If investors have questions regarding lease types or their responsibilities under leases currently in place, they should be sure to have their real estate lawyers conduct a review of the leases on their behalf. That's the end of Chapter 3, familiarizing yourself with leases in place. Check back for Chapter 4, check the HOA Covenants. Thanks for watching. Leica Real Estate Services offers Minneapolis licensed realtor services as well as Minneapolis property management and leasing services. We offer free no-obligation sales and rental analysis and initial consultations. Feel free to pick our brain anytime. We'd love a chance to earn your business. LeicaRealEstate.com 763-645-4617